Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the on-chain data for Bitcoin, giving you my thoughts and opinions on what I think the data means and where I think things are heading. As I get into the video, if you find it useful and informative, smash that like button, I really do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. Now if you haven't yet joined us in Discord, guys, you are missing a trick. Check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Okay guys, let's waste no more time. Let's jump right down into this one and start talking about what is going on here with Bitcoin. Okay, we have obviously seen some volatility in terms of price action. We'll jump into the charts after we've taken a look at the on-chain data. So let's go ahead and start up this. So up here, top right hand corner, just brief update, inflows and outflows. Okay, so since the 1st of January 2023 up until yesterday, which was the 10th of May 2023, there has been 3.6206 million Bitcoin going onto the exchanges. We can see that there's 3.5783 million coming off the exchanges during the same time period, which basically means that we have seen 42,330 Bitcoin more going onto the exchanges than has come off. Now, why is this important? It's all about the supply and the demand imbalances. Okay, so if we see more Bitcoin being made available for purchase, generally that's more of a bearish situation. And if we see a lot more Bitcoin flowing away from the exchanges, that's usually more of a bullish situation, because you find that the imbalance between the supply and the demand metrics mean that price action is going to react positively or negatively. So it's important that we kind of reflect on these. These are still reasonably small numbers. There's no high volume here, so we can't kid ourselves into thinking about that either. Now, if we jump over into the line graph, you can kind of see how everything's kind of being matched up. Equal supply and demand with the occasional spike here and there. Okay, now if we take a look at 2019, the same time period where we saw a significant surge to the upside and the start of the previous bullish market, we can see that we have significantly lower volume now than what we had then. So for the same time period of the 1st of January 2019 to the 10th of May 2019, we can see that we had 6.4041 million going onto the exchanges and 6.4222 million coming off the exchanges. Again, we can see that we have a slightly more bullish situation here, with more Bitcoin flowing away from the exchanges than is flowing onto the exchanges. Otherwise, everything else is kind of more married up one for one, and you can kind of see equal measurements between the supply and the demand. But it is still slightly on the bullish side. So where we are right now is slightly on the bearish side. And what we had previously in the previous bullish market starting point is actually in a more bullish position with slightly higher outflows than inflows. Okay, and so at the moment it's interesting. We have about 45% reduction in inflows and outflows if we were to compare the two time periods, 2023 versus 2019, sorry, and we can see that actually we have more flowing onto the exchanges than is coming off now, versus 2019 with more coming off than going on. Okay, so we can see bullish sentiment versus bearish sentiment across these two time ranges. Now, as we come up into wallet counts, we can take a look at the Bitcoin Dust wallets. This is basically a wallet that has at least 0.01 Bitcoin in it. It can be over 0.01 Bitcoin, but it cannot be under, and then gets included in the count. So here we have 12 million wallets that have over 0.01 BTC in them. Okay, now if we come over to the other retail sized wallets, you can see that they are all moving up quite significantly. They believe that the bullish market is here. FOMO. And this is just another dip to be buying. Okay, and we can see this here with our Krill. Our Krill are wallets that have over 0.1 Bitcoin in them, whereas our Dust is over 0.01 Bitcoin. Okay, so our Krill is over 0.1, so they can be over, but they cannot be under. And here we have 4.38 million wallets that have over 0.1 Bitcoin in the wallets. Okay, and they can see that they've been accumulating for quite some time here because they believe the bottom is in and that we're in a bullish market now. Now, the shrimp, the Bitcoin shrimps, these are basically anyone who have at least one Bitcoin in their wallet, can be over one Bitcoin, but cannot be under. And here we can see that we have 988,000. We're close to the 1 million shrimps out there, which is cool. These are retail investors. I like to see them be successful. I just don't think they will be. At least a small chunk of these are going to succumb to selling pressure. I probably would have thought that if we hit 1 million shrimp wallets, I would expect 300,000 wallets to basically sell off, I think. But we'll see how that kind of goes and plays out over time. Ultimately, price action is the orange lines. They're going down, and we can see retail are accumulating. Now we can see the dolphins. The dolphins are your high net worth individuals that have at least 10 Bitcoin in their wallet. They can be over 10 Bitcoin, but cannot be under. Here we can see that we have 156,000 wallets that have over 10 Bitcoin in their wallet. So again, they've been accumulating. Now I've dubbed these all as retail investors because they do what retail investors do best, and that is they basically buy high and sell low. It sounds awful, but here's an example. Okay, we can see that they started selling here. Shrimp wallet started selling at $22,000 and started buying again up here at $27,000. They're not the only ones. We could also see the dolphins, the high net worth individuals. They were selling up here at $28,000 and started buying again at $30,000. Okay, so you can see that they're doing it the wrong way around. You should be buying low and selling high, but retail investors unfortunately act emotionally and they react to price movement a little bit too emotionally, and as such they tend to buy high and sell low, and they kind of wreck themselves over and over and over again on repeat. But the common consistency here, all of these small levels, are that the wallet counts are increasing, which means more people are accumulating Bitcoin at these lower levels. Now, if we go up into our higher, more smart money areas, we can see we have Bitcoin sharks. These are over 100 Bitcoin or more per wallet. Can be over, but cannot be under 100 Bitcoin. We can see that they had a big move to the downside. Okay, and then they started to accumulate again. Okay, so they were selling into the pump to the upside towards $31,000, and then they start to accumulate again down here at this low side at around 30, upwards into those kind of $27,000, $28,000 Bitcoin. Okay, and they're starting to accumulate again. Now, I will say that they've done an absolutely fantastic run recently. If I bring up the 365-day view for the sharks, which is this one here, you can see that they bought the November lows, and then they started to offload as the price action starts to come up into the lows over here at around $31,000, and now they're starting to accumulate. Now, they don't always get things right. We have to note that. Okay, they are just basically trading Bitcoin, and sometimes they're going to get it right like they did here. Fantastic buying opportunities and selling opportunities, and sometimes they get it wrong like they have done historically as well. Okay, so we don't look at them thinking they have all the answers, but it's interesting to keep an eye on what the traders are doing, at least the professional level traders are doing, in my opinion. They follow price action essentially, but they're not emotional about it. Now, Bitcoin whales over 1,000 Bitcoin per wallet over the 90-day period gives us a little bit of encouragement, right? Oh, look, whales are buying, and it looks like there's some significance going on here. But again, it's important that we zoom out on the picture here because sometimes you don't get the full picture. As you can see, over 365 days, the whales have been consistently selling. They were selling the June lows, which was at the time the bottom for many influencers in the space. And then we have the November lows, and you can see that these wallet counts are still decreasing even after the bottom is in over here. And as liquidity gets provided, they continue to come on out. As people are willing to sell a little bit, you can see that there's a little bit of accumulation here, but there's nothing overly amazing going on. There's no big spikes to the upside on the Bitcoin whales, not yet anyway. So coming back to our charts over here, we can see the Kraken size wallet has taken a sizable move to the downside and a bit of a move to the upside. Now, for anyone who has not got a keen eye, and for those who have got a keen eye, you would have noticed one clear thing. We have Bitcoin Dust wallets going up. We have 3 retail size wallets on the up. We have smart money on the up. Who is selling? Right? And so we have to consider one very fundamental basic. If people are buying, then someone is selling, okay? Or people are selling if people are buying, okay? And at the moment, we have all wallet counts increasing. This means that we either have 2 levels of the extremes. I think it's probably the higher extreme to be true, okay? So what I mean by this is that Kraken-sized wallets are monitoring wallets that have over 10,000 Bitcoin in them. Now, you could have 100,000 Bitcoin in there. You could sell 90,000 Bitcoin and not move this needle at all. So I suspect that it is large players right now that are selling, and that is why we see an increase in all wallet counts except for we just see this one being flat and we see an increase on all others. So I suspect that's what is going on here, that we see that there's to enable all these wallets to be going up, someone has to be offloading. But since we can't see those offloads occurring within these smaller sized wallets, they kind of have to be on this higher spectrum. That, or of course, they're on a lower spectrum and they have lower or less than 0.01 Bitcoin, and there's just an obscene amount of them. I think that's very unlikely to be the case, and therefore I think it's more likely that we've got some big players like MicroStrategy, for example, that could potentially be offloading their Bitcoin over to retail investors and maybe sharks and whale investors at this point, and they're just looking to accumulate as people are looking to sell. Okay, but at some point I do think that we're going to have to continue our move to the downside, because we haven't seen any significant surge to the upside with smart money yet, in sense of they haven't really been able to pile in the market the way that we have seen them previously. So for the most part, this is kind of business as usual, but I did find it quite interesting that all wallet counts are on the up, when that's not technically possible without one wallet count decreasing in size. Okay, so there's only really two options here that I think are viable. You've got people like MicroStrategy that have so much Bitcoin that they're offloading a little bit of it and you can't notice it within the wallet counts of the 10,000 Bitcoin or more wallet size. Or alternatively, there's exchanges that are offloading their Bitcoin, and essentially we can't see that because that's not normally monitored within here, and they would be way above the 10,000 Bitcoin limit anyway. So for the most part, that's kind of where I leave this. I think we have some really large investors in Bitcoin looking to potentially offload and grab liquidity, and we just simply cannot see it within the way that this data has been cut. And I cannot cut it any more than I already have done, because my data source doesn't cut it any further than what we see here. So essentially, this is where we are with this one at the moment. We'll keep a close eye on it, but I suspect we are going to see a lot more volatility with BTC in the coming kind of days, weeks, and months. Okay, so let's jump down into our price action, and knowing all these things and reflecting all this data, what does it mean for the price action of BTC? Well, we can see, I'm just going to take a look at smart money here to start with. I think it's probably the only one that's really needed for the macro view right now. And we do see a bullish change of character, right? So we were in a bearish state of play during the bear market of 2022, right? And we have this change of character. This gives us that bullish hopium. It doesn't really align to the idea that whales are going to be looking to accumulate only when retail sells, but it helps us kind of form a narrative that, okay, we might not be done pushing upwards. I think we probably have kind of finished pushing upwards, but until this characterization has changed, it's quite hard to think that, we're not just going to continue going up and we're in a bullish market. Okay, so there is hopium there around this area. Now, in terms of price action, we are still looking to move on down, and we have got some key areas that we need to focus on. We've obviously got this fair value gap here, the imbalance in the order book. And this one at the first gate is about 25 to 26.5. Okay, so $25,000 to $26,500. That's the first fair value gap that I think we should be thinking about trying to move up into, or move down into, I should say. Grab that and then see how price reacts. Ultimately, though, I think this middle one right down here is actually the most interesting. This is because it falls in line with our equilibrium area on the smart money concepts chart. So essentially, this is an area that I think we're going to come down to. We might bounce around a little bit. We might bounce here at the 25K range. We might find that the 200 EMA is going to be a brief support for us, but at some point I imagine that we're going to touch on the equilibrium and we're going to fill this fair value gap here. And it wouldn't be too much of a stretch to think that we come down and we fill this gap and potentially just come down lower than this low here and actually grab that last little bit of liquidity down there. Now that low actually comes in at around $19,000, but of course you cannot move in a straight line. At the moment, we still have the ability to start to think about this thing as an impulsive structure doing this, and it might just be that we end up with a quick zigzag corrective structure, just something like this, and that was probably a bit extreme. If I pull that back up here, probably test this trend line like so, and break back down again and grab that low liquidity. That would be the ideal situation, because I do want this to be in a bullish market. It's not that I want us to be in a bear market and I want us to go down into new lower lows. It's just what I suspect is likely to happen, considering that whales were selling in November, and I don't think they're going to be buying higher than they sold. So my expectations are that we come down lower, just simply because it doesn't make logical sense that whales will be paying higher prices. And no, I do not think that whales will be making a catastrophic mistake by selling when they don't intend to, thinking that the bottom is still going to go down deeper. I think that they're very much calculated in how they operate, and I think they are calculating selling in June, and they calculated selling all the way down into November, and they calculated selling at these lows. They also calculated buying or selling into the liquidity that was generated from this move to the upside. So for all these reasons, I do suspect that we are likely to see a move to the downside into a new fresh lower low, although that's not what I want to see. Okay, I just want to be really clear. I don't want that to be the case. I very much want just a simple zigzag pattern here to basically come down, grab all of these fair value gaps and create massive accumulations and opportunities. That's kind of what I'm looking for. And it's not because I missed the bottom. I've been dollar cost averaging for quite some time. So has Chris. Chris was able to get in down here at those $15,000 lows on Bitcoin. I wasn't interested in Bitcoin, but I bought up some fantastic prices on ADA and some fantastic prices on XRP and many different altcoins as well, such as Singularity, Net, and DAO, and all those kind of good things. So it's not that we've missed the bottom. We're not sour about anything like that. We're simply just thinking that this doesn't make sense that we continue this move to the upside, and we have to have a correction down. And I'd like this to be just that we grab these fair value gaps and then we get on with life and we can go up into a next bullish market. But, you know, until I see whale data that supports that idea, it's going to be hard for me to kind of, you know, sit here and tell you that's what's going on when I truly do not believe it to be the case. So it is what it is, essentially. Now, from our Elliott Wave theory kind of point of view, that would basically mean this range, 12,500 to 19,700. That would be the ideal area. If we get the zigzag pattern, we could kind of be, you know, coming down here to 19,000 and be done with it. And technically speaking, from an Elliott Wave theory point of view, that's a WXYXZ. I know I've got this on a more bearish situation, talking about this potential low down here at $5,000, but that's not a given. The one that I would say that is still in play is the WXYXZ structure right inside here. If I remove that one out, you can kind of see W, X, Y, X, and Z. And so that would be the one that I would like to see play out, because that's the one that I think would be most preferable for most retail investors in the space. So with that being said, it's probably not likely to happen, just simply because too many retail investors would be protected under this scenario, and that's not generally what's likely to happen. As I said, retail investors are generally going to have to sell their Bitcoin to the whale investors if we want to see smart money coming back into the space. Now, from our support and resistance, demand, supply, we can, of course, acknowledge that previous demand turned into supply. We're getting rejected from this area. As you note, we're just coming down on that weekly stochastic RSI as well, and we are targeting out these lows, 24 to 25, maybe 20 to 21. Those are the key areas at the moment. By the time we actually see those, we're going to be in the oversold area, I would have thought. But there is a big problem, and that is that our monthly stochastic RSI is almost back up into this overbought area, and we're up here in this area of supply. This is not a good sign. So it'd be interesting to kind of see how that one plays out. We were down in oversold for months, so we can be up in overbought for months. Sometimes we're only up here though just for maybe 1 or 2 months, and then we come crashing back down again. So we need to be really, really cautious here when it comes to this. We could see a lot of volatility within Bitcoin's price action across these macro levels. Of course, I'm talking months and I'm talking weeks here. This is not something that I'm going to see instantaneous results on. This is something that's going to take a long time to kind of play out. So kind of align your time horizons to kind of that aspect of things. Okay, so ultimately, yeah, that's kind of where we leave this one, I think. We can still see that there's some interesting stuff going on with the on-chain data. We can still see that we have the idea that there's some hopium around bullish structures here, and we don't have to have the new lower low. I do suspect that that is something that we will have to unfortunately see, but we'll have to cross that path when that time does indeed come. If you found this useful and informative, smash that like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. With all that said, done, out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.